Hi everyone, Andrew here with a new YouTube video. In this one we're gonna talk about when to use a break of structure to enter the trade or when to enter more aggressively on the first change of character. So to start it off, if you haven't seen my last videos, just go ahead and watch them. I'm explaining each easy concept that I use into my trading strategy and my trading plan. So the last video we talked about the difference between the change of character and the break of structure, and now it's time to talk about when to use the change of character to get the entry or when to wait for the next break of structure. So let's say we have this demand zone right here with a POI right here. Okay, so now price, as I told you guys, price is retracing, right? It's tapping the zone, gives a nice reaction, and then this happens, price drives into the POI, and then we have that change of character right here, correct? So now we have the change of character. So immediately after that, most of the time we also create a new entry area somewhere around, let's say here. Okay, first of all, what most of them do is they just enter right here when price taps the POI without any confirmation, just to get that nice sniper entry, that nice quick entry, so that they can flex on Instagram and post some insane results, have that 1 to 100 risk reward. Most of the traders that do this and just post weak entries just immediately after tapping the POI, they're just gamblers who do not understand how the market works, and they are not successful traders, and I can guarantee that. They only do that just to become more popular and sell their course, mentorship, or whatever. There is no such thing as sniper entry or no confirmation entry or weak entry. You always have to wait for confirmation in order to actually have a winning strategy. So the next thing and the next entry that most people look for, most smart money traders look for, is the mitigation of the area or the POI that was created, or the demand zone that was created before the change of character, and then they enter right here for price to continue higher. Now this is an okay entry if you really have a refined POI and there are more confluences in order to take a more riskier entry. A more riskier entry, which is the first mitigation after the change of character. Why is it more risky? Because most of the times price will just give an initial reaction and then continue lower past the zone and then to the next zone where the same thing can happen. So you need to wait for more confirmation there also. So the mistake that most people do is they either entry on the first tap every time into the POI, and then they just take stop loss after stop loss until they actually catch that bottom wick that they can flex to it, or they just don't wait for enough confirmation. So here they take a loss after the change of character. Let's say here again they take another loss on the change of character, they're not patient. Here again they take another loss, and then when the actual trade comes in, they do not want to trade anymore because they have had so many losses in that particular day. So this is where patience come in, and this is how I explain to my mentorship people. So you have two types of entries, right? You have entry right here, which is a riskier entry, and then you have the entry here after the next break of structure, which is a safe entry. So let me explain them a little bit. This is, like I said, this is a riskier entry because price is not yet confirmed to go bullish. It just had an initial reaction, which can also be a fake trap. So what the market does usually, this is just a first trap for the smart money traders before taking them out and then continuing higher. So this is why we like to avoid the first entry and wait for the next confirmation, which is a break of structure, and a mitigation, because usually after the next break of structure you will have some sort of range or POI being formed where you can wait the seconds, if you trade the seconds, to take that entry. There is of course some particular cases where I will look for an entry after the first change of character, but those are rarely in the market. Those usually happen just when there's a lot of volatility coming in, or so price is dumping exactly into a POI that I had marked. It just took a lot of liquidity and it just looks good to reverse, and then I can play the second time frame in this area to enter the trade more aggressive. But 90% of the time I will just wait for the next break of structure, the next mitigation, and I will play this area because it's gonna be much safer. Because you know that if this area doesn't get respected, which is the last demand before the break of structure, and price decides to go lower, then it will just dump more and there's no point in actually looking for more entries, so you will just take the loss and get over it. So there are a lot more chances for this entry right here to be a better entry, and also what usually happens after you have the change of character and the break of structure and the next mitigation, price will just have a lot of volume coming in from this area, and then price will just start pushing. So this will be the actual push. If you're just entering the change of character, price can come lower, which this does happen a lot, and then it creates the change of character on the small time frames, the break of structure, the mitigation again, and this is where we will enter after this trap has been set and has taken out the initial early smart money traders. So that's a really good confirmation. That is also a good example of how the market manipulates those smart money traders who do not have the required patience. If you're trading a pair like Euro USD, you're gonna have a lot of mitigation. So if price decides to get into a POI and create that change of character, and then you wait for the break of structure, you add the mitigation, usually what will happen is something like this. Price will just move higher, respecting the previous demands being formed. So you have the first one right here, then you'll have another one right here, then you'll probably have a flip zone somewhere around here, then you're gonna have another POI right here, and so on, that gets respected over again. So each time price does this, you have a higher chance of catching the trade with a better win rate. If you're not waiting for that, then as I said, you'll just get stopped out a lot, you'll have a lot of losses, and you probably do have a lot of losses, because most smart money traders that I know that trade without actually understanding the markets, they just get loss after loss after loss, and when they catch that sniper entry, that weak entry, they just flex it out on Instagram. So that is not a realistic way of trading. You need to have confirmations in order to increase your win rate. And confirmations, you get them when you see structure shifting, when you see order flow shifting, and then price just becomes much more clearer, and its intent is gonna be way easier to see. So just wait for the initial change of character, wait for the next break of structure, and then take the confirmed entry right here to take out the high or whatever target we have. If you have the liquidity here, then just aim for that. So the point of this video was just to help you guys understand that it's okay to have a later entry, and it's okay to have a bigger stop loss, because let's say you enter somewhere around here after you see the confirmation, okay, and even if you have a higher stop loss, let's say below this area, or even covering that, if you see there's something more here that can come, where price can come and take this as a point of liquidity and mitigate that before, because this is also a thing that the market does, okay, creates a fake point of liquidity right here and then leaves a unmitigated POI, and then this is again where a lot of traders get in the trade and they do not wait for confirmation, and then they get stopped out, price comes lower and then goes up. So even if you have a POI down there, you need to be smart about it and avoid any losses. So even if you enter here, just put your stop loss below the whole POI and area, because you know that the entry has been confirmed, it has a higher probability chance that it's gonna work out, so you have nothing to lose. So instead of putting a stop loss really aggressive like here or here and risk getting stopped out before price going to the upside, just use a higher stop loss. It's perfectly fine. Even if you're targeting 1 to 3, 1 to 5, that's an amazing return on investment on trading, because a trade like this has a 80 to 90% chance of giving a reaction to place break even or even winning the whole trade. So I really hope this video has helped you understand the difference between the risk entry and the confirmed entry, and you're gonna select your trades better, and you're also gonna see an improvement in your win rate. So thanks for watching. If you're not subscribed, please subscribe and give a like and leave a comment. It will help the channel grow and I can push much more trading videos.